Real estate agents, I want to walk you through what I think is one of the most important jobs we play, and that is providing financial counseling on the value and the importance of owning your own home. Not only from a pride of ownership thing, but from a creating your retirement thing, creating your own net worth, creating your own wealth. Folks, too many people out there are thinking they're making the right decision by renting, when I want to show you an alternate way of thinking that could add hundreds of thousands of dollars to these people's lives over the course of time. So let me give you this example. What I've done is I put up a scenario here where we have a $350,000 purchase, let's just say in Olathe, Kansas, with 5% down, and that 5% down is $17,500, right? Follow me so far? 6.5% interest. When I'm making this video, it is June 24th, and we can probably get you right around 6.5% interest if you're really well qualified. And your PITI is going to be $24.68. Now, there might be some mortgage insurance in there as well. There might be some other things, but we're going to say right around $2,500. But the house payment isn't the point I'm trying to make. I get that this may not be for everybody, but follow me here. This is so important when we're trying to create personal wealth. Share this with your renters, and they may decide to become buyers. We're going to say this. We're going to use 8 years. 8 years is our window. And why did I choose 8 years? I chose 8 years because if you're buying your first home, you should probably plan on living there for at least 8 years before you move up or move down. If you're looking at moving someplace in a year or two, then don't buy a home. Well, maybe when appreciation was 12%, that was a good idea. But right now in Kansas City, we've come down to 8.7% or 8.3%. I can't remember which one it is in the greater Heartland right now for the whole market. But across the country, the Case-Shiller for the year so far is 2.3%. So there's a move afoot. Pay attention to that. But if you're buying it for 8 years, which makes sense, right? What you want to understand is this. In Kansas City, just like the nation, we have about a 4% appreciation rate when you average all the years together. Like there was a little bit of dip there in the Great Recession, that we had some crazy years right after COVID. But in general, over a 20-year period, Kansas City is going to have a straight line appreciation of about 4%, even though it may look like this sometimes, but it'll end up being about 4%. Follow me so far. So at the end of the 8 years, if we're making our house payments and we're going through and we're letting time do its thing, appreciation, the value of this house after 8 years, and you can check this with your own math or whatever, instead of being a $350,000 house, it is now a $479,000 house. $479,000. So right away, you have increased the value of your home, value of your equity, $129,000. That's fantastic. But wait, it gets better because you've been making house payments for 8 years. And every time you've made that house payment, you are paying down the amount of the loan. Look at it as a forced savings account. Well, if you go out, you look at an amortization table and you go 8 years down, what you're going to find out is that you just paid that loan down $40,787 or so. That's for savings. If you were renting for $2,500, you have no savings. But if you're making that house payment at $2,500, great. You now have an equity position in that home of about $169,800. That's the difference between renting and owning. 8 years from now, this could be a very important part of your net worth. Now, I presented this to some agents earlier today, and one of them was like, well, if you're buying your first home, you got to also make sure you have some money to take care of the repairs and the maintenance of the home. And that is absolutely right. But let's just say worst case scenario. A roof for a place like this in today's dollars is going to cost around $12,000. Let's say they need a whole new HVAC system, $20,000 or $8,000. So 8 plus 12 is $20,000. Even so, that would still be $149,000 in growth. $149,000 in growth, even if they had to put some of that on their credit card. I'm not done yet, because some of you are saying, well, Chris, what if they had stayed renting, took that $17,500 and put it into the stock market? Well, that's a choice, and it's not necessarily a bad choice. Let's play this out. $17,500 year to date, the stock market has returned 3.11%. Not great, right? Over any long period of time, the stock market generally averages 10%, but over the last 5 years, it has done an unbelievable, where did I have that number? 13.6%. So if you took that 17.5 and put it into this, or heck, you could do a little bit better in my American Express high interest savings account, but that 17.5 after 8 years would now be worth $22,359. Follow me? If you put it into this and we had that unbelievable, unsustainable growth over time, then that would be worth $48,536. Either one of these would be better than doing nothing at all. Can we agree on that? But let me ask you, if we're talking to your kids or you're talking to your younger self, wouldn't you tell them that $169,000 is better than $49,000, right? Do you see how this works? Do you see how once you become a homeowner, you start getting to take advantage of things? We haven't even talked about tax deductions that might be possible depending. We haven't talked about all the pride of ownership. And look at this. Teach this to your first-time home buyers, whether they're 24 years old or whether they're 54 years old, it doesn't matter. People need to understand how real estate can work for them. We need a healthier country economically, and this is one of the ways to do it. My name is Chris Lindquist. I work with Marcus Jameson here at Keller Williams Realty Diamond Partners, Inc. in Olathe, Kansas. We're about training agents so that they can help sell more homes to buyers and sellers and make our community wealthier. We are here to train you. If you have any questions, please reach out. Just dial that phone number in the notes down below or click the link on kansasrealestatetraining.com and just reach out, or maybe just follow us on YouTube. We are here for you.